Hello everyone, welcome to the Ichimoku charts.com daily analysis of the Euro US dollar FX for Tuesday, June 18th, 2013. Well, a continuation of the trend to the upside today, and a candle that's made a higher high and a higher low. The candle that we're watching is the second last candle on the chart. That last candle hasn't fully developed yet, and we certainly haven't seen the candle develop in terms of range or momentum at the moment, so really can't analyse that at the moment. But the current candle that has finished trading, it's a very indecisive type candle. It's a spinning top type candle. And now for the 1, 2, 3, 4, 5, fifth consecutive day, we've had a relatively small body to the candle, and that's in contrast to these couple of days that we have seen previously as this market rallied up above the cloud. We saw some very large white-bodied candles suggesting that the buyers had found some very strong upside momentum, and here at the moment the buyers seem to be biding their time to a degree. Whilst they are making net bullish progress, and they have done so today, it has been a very much smaller amount. But the important thing here too is that in only one of those candles, this black body candle, we've seen the sellers make net bearish progress, so it does say something about the strength of the buyers as opposed to the sellers in this market. Now this, as I've mentioned, today's candle is a spinning top type candle, and that's where we have a small body with a shadow on the top and a shadow on the bottom. And the shadow on the top and the bottom of these candles are very important. The shadow on the bottom here represents upside price rejection, and upside price rejection from an important previous area of resistance at 133.20, and we can see here, and then an area that now has been acting as support for the past 1, 2, 3, 4 and 5 trading days in succession, including today's trading. So very solid support at 133.20 for this market. The support from that area extends in a range highlighted by this yellow rectangle extending down to around the 132.50, so very solid support for this market down below. But as I've mentioned, this is an indecisive candle, and that's also because of the downside price rejection that the market saw from the above the 134 level, and the 134 level has been a previous important area of support and resistance, and here today we've seen rejection from there and the market failing to close above this, so quite a bit of indecisive trading. So we do need to be careful of a potential change of trend in the first time frame, with the market making a lower high and a lower low, but it certainly doesn't seem as though it will do that with that solid support down below. If we are going to see the trend continue, however, we will need to see the buyers take out the 134 level and the high of the previous candle to establish a higher high and higher low, and I'd say that the probability is on that side, but we could also see some congestion trading at the moment, trading in a range bound by this overhead resistance and the underlying support at 133.20. In terms of where the market has closed within the range, it has closed between the midpoint level and the high, and that suggests that the buyers have closed with control at the end of trading. So that does give us some hope in the market finding momentum to take out the 134 level, but it also says something about the relative strength of the sellers, and the strength of the sellers is just not there. Momentum seems to still be with the buyers in this market, but we can't preempt the market. We really do need to watch how the market reacts to the 134 level and then to the 133.20 level. Now, in terms of the Fibonacci extension and very large ranges in this market at the moment, is very strong first time frame uptrend, a very small one candle downtrend, and now another first time frame uptrend that has continued for quite some time. But here we see the market reacting to the 50% level with this indecisive type candle. So it does suggest that there is potential for a change of trend, so we should be looking for a potential lower high and lower low. But as we know, we have that solid area of support down below, so certainly not a good likelihood of that happening. If the market does trade in a bullish manner above the 50% level, our next target would be the 61.8% level at the 134.76 area. In terms of the Fibonacci retracement, here we've seen the market trading through the 100% level, and we have tested to the 161.8% level at 133.84 and seen rejection from there for the previous three candles. Today we've closed above there in a moderately bullish manner on a spinning top indecisive type candle. It does suggest there is a possibility of the market trading to higher levels. Our next target is the 261.8% level at 135.12. But with this being an indecisive candle, it does also suggest possibility of a change of trend, but with the strong support down below, more likely that we could see the market trading higher. Now, in terms of Ichimoku, a very bullish market in all three timeframes. The market's trading up above the cloud, so we're bullish in the long-term timeframe. The market's trading above the Kijun-sen, the pink line, so bullish in the medium-term timeframe, and also bullish in the short-term timeframe by trading up above the Tenkan-sen, the green line here. The Tenkan-sen and the Kijun-sen are pointing up quite sharply, and that's reflecting good, solid upside momentum that we've seen in this market in both the first timeframe and the second timeframe. That's the medium-term timeframe and the short-term time frame. And if we look across here to the Chikou span, that's above the corresponding price action, so it's confirming the bullishness that we're seeing in all three time frames, and does suggest that we could see some decent follow through above the 134 level and a potential test up to the 134.85 area. One or two causes for concern are the extent that the market is trading away from both the cloud and the Kijun-sen, and the market is looking a little bit overextended, and it wouldn't surprise to see the market attempt to retrace back towards those Ichimoku indicators because they represent equilibrium in the the long-term time frame and the medium-term time frame. So we do need to be aware of that. But with this very solid support extending from 133.20 down to around the 132.50 level, it's unlikely that we will see the market test down there in a hurry. And it certainly does seem more likely that the market will trade to higher levels. But obviously we do need to watch that close barrier at 134 very carefully, and if we see strong bullish activity early up above there, the market has potential to trade up to the 134.85 level.